What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Palantir Technologies, ticker symbol PLTR, on a variety of different time frames in anticipation of tomorrow's trading day, Thursday, January 25th. Well, Palantir here today, down about 3.35%. This is historically a volatile name, a slightly lower priced stock in terms of dollar value, right? Not necessarily market cap, but dollar value. But still a very volatile name. This thing likes to move, which is, in my opinion, is not a bad thing. But this is the 1 minute chart that we're starting on here. Here on the 1 minute chart, not a lot going on in today's trading day that I would, put out there as being a clean trading setup by any means, at least as far as I would trade intraday. Let's move on here to the 5 minute and get a little bit more context here. You can see that this white line is the 50 period. The purple is the 20 period, and that yellow is the 9 period EMA. Spending very little time today even testing anything, near the 50 period, really done doing so after about an hour after the market opened, fading the remainder of the day. However, kind of catching itself in the after hours, which, from a bullish perspective, obviously, I would prefer to see. We'll get to that in a second once we move through these time frames. I'm going to look at that on the daily chart, but look here at the 30 minute now. This is why it is so incredibly important to look at a variety of time frames, because look here at the moving averages on the 30 minute chart. This is the 50 period, this is the 200 period. And by the way, if you're unaware, the reason why I'm always looking at the 50 and the 200 are because those are by far the two most common on essentially any time frame chart. And I want the most amount of eyeballs possible. I don't do it just to be boring, right? I'm not stuck in my ways. I do it because most people use these two EMAs or moving averages in this case. And TA, in my opinion, is a self-fulfilling prophecy. So if we look here at the 30 minute, and we even zoom out a little bit, you can see here that we need context. These levels were, not greatly relevant, but a little bit more relevant a week and a half ago. As of late this week, in the last few trading days, we've only seen respect of either of these levels in two scenarios. Look here. We saw the 200 period, the darker gray line here, being treated as a support level on January 19th in the pre-market. Okay. And then this morning, we saw the 50 period being treated as a support level in the pre-market. Almost no respect in the last week, aside from maybe you could argue here being treated as a potential resistance level on this time frame with these moving averages, with real volume coming in. Anything that isn't pre-market or after hours, right? Really pre-market in this case only. And for that reasoning, let's move on here. Let's take a look at the 4 hour. We have to keep in mind all the time frames, because remember, anytime we're putting on a trade, or taking off a trade for that matter, we want as many factors from as many different time frames as possible lining up in our favor. I never find it's a good idea to just say, okay, I'm going to trade only off the 4 hour chart. I think the 4 hour works best for me. And while that may be true, or you may feel like that's true, we need to look at all of the time frames that are the most popular. And these are kind of the 5 that I landed on. Some might argue a 15-minute chart. I would not disagree. I like to go 1, 5, 30, and then 4 hour and the daily. But the first thing you'll notice here on the 4 hour chart, this 200 period moving average, it's sloppy, but it's being respected as a potential area somewhat of resistance in a sloppy manner, right? But previously we saw there was a lot of trading going around this 50 period here on the 4 hour chart, even going all the way back to the end of 2023. That was a very, very common level to see a lot of volume around. And look where we find ourselves here today. I mean, look, the stock's down 3.35%, but we are where we are. So now we have to look at the situation and say, okay, what kind of data can we pull from this? The data that I'm pulling from this, at least on the 4 hour here, and then we'll move on to the daily, is that we're now at a level where a lot of trading has gone on around in the last 30 days. And that's not necessarily a bad thing, because there's an argument to be had there. It wouldn't be surprising to me if we saw a couple of days spent around this region. Which, if that were to end up being the case here, of course, we'll see how this plays out in the following days. That would be a positive, a net positive for bulls, right? Because granted, the stock's lower than it was, Monday and Tuesday, but we're putting a stop to today's, if you want to say bleeding, it's a volatile name. 3.5% on Palantir is hardly bleeding, but it's down, and we're making a test now from the 200 period down to that 50. So let's look here at the daily chart now. At first glance, it looks like we're kind of in no man's land, but here's what I'm paying very close attention to, and I'll lay out some bullish and bearish scenarios to suit everybody here. Now look, it's clear we are within a channel right now. We're kind of in no man's land between this 15, 15 and a quarter, 15.50 range, right? It's never an exact penny. It's always going to be a range on these more volatile stocks. Right around 15 and a quarter, I'll say, up to about 18. Okay, it's nearly a 3-point wide channel, and we're kind of smack dab in the middle of it. So here's what I'm looking at. From a bullish perspective, what I would ideally be looking for, now keep in mind, this is 7% away, okay? But we have to be looking at something. When you're in no man's land, you have to place that target that your eyes are looking at, right? Not necessarily a trade target. You have to have something to be looking for. And that is going to be the one that I think most bulls are looking for, is a retest of 18, right? Ideally, in the coming weeks, a retest, a reclaim, a back test, reclaim 18 and that 50 period as a support level, ideally 18 and a quarter, right? And then bounce up out of the hole from there. But, it should be mentioned that this area right around 17.50, 17 and a quarter, we'll say, historically, going all the way back to, just on this chart, we could say, June of 2023 has been an area of interest. So I'm also keeping an eye on that, just weighting it less in my head than that 18, but being more realistic because it is a bit closer. It is more realistic for a single day volatility to make a test of that region. Now, if I'm a bear looking at Palantir right now, it's pretty hard to argue that like 16 is an area of interest. 16, we currently find ourselves, approximately 4% away. A repeat of today puts us down in that region. Now understand, that would be breaking what we talked about on that previous chart, right? But 16 is clearly an area of interest, and I think a lot of bears, given a test of 16 and a breakdown side of 16, clearly their eyes are heading next to around 15 and a quarter, that 200-day moving average. So you bears, you're looking for really any downside break from here to break the bull's spirit, right? But you bulls, ideally, you're looking for any kind of bounce. Just put distance between where we currently are and the stock price, right? Get a little bit of padding so that we can make an honest retest of that, 17 and a quarter region, making our way back up to 18, which ultimately, as of right now, that 18 and a quarter, 50-day moving average is the ultimate target if you're a bull. That would need to be reclaimed, but that's typically going to be more than a one-day event, 7% away, right? Now, for you option traders, we're going to take a look at the chain, see what the traders are thinking here today as we head into tomorrow. But just understand, if you're trading options here on Palantir, IV is slightly elevated compared to this time about a month and a half ago, or compared more so to a month and a half ago. So if you're trading contracts that are anywhere from, anywhere I'd say less than about 6 weeks, understand that currently the Vega value in those contracts is higher than it was about 6 weeks ago. So if you bought them 6 weeks ago, understand that you've benefited from that. If you just bought them today, for example, understand that you paid a little bit of premium to have that Vega pump in those contracts, right? Think of Vega as air being pumped in and drained out or let out of a balloon. In terms of dollar value of the contracts, it's one factor out of all of the Greeks, right? But it is a crucial factor when you're dealing with stocks that have their implied volatility kind of bouncing all over the place, like we have here on Palantir, going from under 50%, 48% in mid-December to where we currently stand here now, about 77%. That in and of itself can make a tremendous difference in contract value, even without a whole lot of actual stock movement, delta movement, right? Now let's take a look here at the options chain on Palantir. And I have some good news here for the bulls, kind of on all fronts. Now look here, 160,600 calls, 67,800 approximately puts. Good sample size, just under 250,000 total contracts traded here today. That's a good sample size on Palantir. That gives us some good data to work with. The lower that total contracts traded number is, the less we can trust the options data, right? The more of a grain of salt we have to take it with, because one big trader, if only 20,000 contracts have been traded, one big trader can come in, buy or sell 10,000 contracts, right? And all of a sudden the data's heavily skewed because of one whale. Or if the contracts are cheap, not even necessarily whale, right? Just some trader coming in and shaking things up a bit. 70% calls here today. That is an absurd ratio, but not uncommon to see on Palantir at all. I track this stuff, every single day. This is not uncommon. This is actually very common on a stock like Palantir, and the bulls should be happy about that, right? Now, some of the best data we can pull out of here for short-term sentiment, right? This gives us actual raw data. What are people thinking here? Look at this. This is often overlooked. The delta of 0 to 20, that tells us, those are the cheapy, gambly style calls and puts, typically very short dated, really far out of the money. And we have actual volumes here. 64,500 calls in that delta range, only 28,150 puts. So we're seeing more than double the short-term bullish speculation compared to the short-term bearish speculation, in addition to the overall total call put ratio being 70% calls with nearly 250,000 contract sample size. That's a bullish chain. I don't know how else to put it here. The options traders today, they're leaning to the bull side. If you got value out of this video, please subscribe to the channel. It's a brand new channel. I appreciate it. Maybe even leave a like if you enjoyed the video, and I'll see you in the next one.